Hey guys, welcome to another video. And in this video, we're going to go for exactly what you need in order for you to be prepared for the Canadian dollar news that's happening later on today in a few hours. Now, last time we discussed, there was a conditional interest rate hike, which actually did happen. So currently interest rates are still at 4.5%. As Governor Tiff MACKLEM said, they will pause interest rate hikes if they see that interest rate hikes that they have been doing have made some effects in the economy to curb inflation, which they've deemed to be true. So the question is, will it happen this time around? Or will we have another interest rate hike? Or will we have the opposite and actually have the interest rates be pulled back a bit? We'll have to see what happens there. But let's get cracking anyway. All right, so without wasting any time, my focus will be on the Canadian dollar. Now, there's been quite a few different suggestions from different analytical centers, but it's widely believed that the interest rates are going to remain the same. Okay, it's still 4.5% for the consensus, which we'll look at in a minute, and 4.5, of course, for the previous. I think it's quite interesting as well to notice, and I have noticed as well, for those of you who focus on technical analysis and fundamentals too, that the CPI for the Canadian dollar has actually dropped slightly, which means that the inflation on the cost of living has started to decrease. So there are some positive effects. Now, the Canadian dollars hiked their interest rates by 425 basis points or 4.25%. Okay, so from 25% or 0.25% all the way up to 4.5%. Now, the interest rates for the Federal Reserve is slightly higher. I believe it's at 4.75. But nonetheless, we do have some really good interest rate hikes that have happened. And now that we have this pause, I'm actually quite interested myself to see what's going to happen. But as always, as I said, technicals always leads to fundamentals. And there's a few types of analysis I want to do today for us to be able to work out where we're going. Now, whenever there's an opportunity like interest rates with CAD news, I always like to look at the pairs associated with it because there are opportunities, abroad. So I would say I'll start with the few pairs that I'm looking at now. USD CAD was my first choice, okay, or joint first choice with CAD CHF, but I'll take them in order. So the first one I was looking at was USD CAD. Now, USD CAD at the moment, the price action to me, the price made a very important algorithmic trend line. This is a near perfect trend line. So this is a buy order aggregate. And my expectations was that price should be able to break beneath this area, which it has been doing. Now, the low of last week is right over here. And as my first trade, let me go over to the D1. My expectation is for the price to be able to give us some sort of taking of this low and possibly a push for a long. Now, on the weekly time frame, when we look at USD CAD, we have a good area of demand liquidity over here. We had an induction for a long the first two times. So we had one here, if we're tracing liquidity, and then we had another one here. And if I just scoot over and push over here, you see that if I remove this bottom line, you can see that the price is wicked into demand over here. So USD CAD right now is in a very good area of weekly demand liquidity. And on the monthly also is within demand as well. So there's a strong level of demand liquidity here that we can go for, which would equal to a buy. Now, at the moment, there is no entry signal. And if I go to the H4, there isn't really an entry to go for a long, even though we're in demand liquidity right down here. So my first analysis I'll give to you guys with USD CAD is I'm expecting the price to take the low of the previous week. If we have the price spike to the previous low, now, before the Canadian dollar news, there is the CPI news, which is at 1:30 GMT time, UK time. And if that does happen, that may create a spike because, of course, the major overarching fundamental across the world economies or the world's economies is inflation. So we will definitely have some very strong volatility on anything related or any inflation related news. So stuff like consumer price index, of course, interest rate decision themselves, and etc. PMI news as well. PPO. There's so many different types of 3-letter digits and 3-letter words that will produce. I even called it a 3-letter digit, but you guys know what I mean. We have a lot of 3-letter words that the market has that will cause the price to move. For example, what we have with CPI. So if the CPI news is negative for the dollar, which I am expecting it to be because we need one more short on the dollar index. So I'm expecting there to be the liquidity gap filled with the news and to push the price down. I expect USD CAD to take the low of last week. So if USD CAD takes the low of last week, that'll put us in a great position to go for a long. Okay. Now, if this happens before the Canadian dollar news and the price is snooping around the low of last week, then I would expect the Canadian dollar news to reverse the price the other way. Now, what would that look like? Well, that is the thing that, I'm still debating over, because from a technical standpoint, if USD CAD does go short and the price is hanging around here, okay, if the Canadian dollar news is bearish, which is what would be if the price goes long, because that means the dollar is gaining strength, then that means we should see USD CAD shoot up for an extreme long. Okay. Now, USD CAD does have some variance away from other Canadian dollar pairs, but I wanted to bring this to light because I think it is a really good piece of structural analysis. Adding on to that, because the body of the candle for this week has closed above the previous week, we do have this bullish close, which is a sign of continuation. However, because we have a buy order aggregate, I'm not surprised if the algorithm of the market will take these, run all the people who have been in the long from last week and then start to push long. Okay, so that's the first one with USD CAD. Pretty simple on the H1 at the moment. The price, the volatility is not that high and the liquidity of the candles is not that much either. So I'm sure the price will start to warm up towards the CPI. Now, the next trade I'm looking at, or the next pair that I'm looking at, Forex-wise, is CAD CHF. Now, I want to pull up CAD CHF here. And we are going to do, I told you that we are going to do different types of analysis because they are important to do. But I'm going to go over CAD CHF and let's have a look. Now, I'm going to start with the monthly on this one. Now, CAD CHF is a very interesting pair. Now, on most brokers, MetaTrader 4 brokers, you can only go back by, well, currently about 21 years. So from 2023 all the way back to 2002, that's the furthest you can go. Now, looking at the charts here, if I zoom in slightly, you can see anyway from here that 2023 has made a new all-time low according to this chart. I'm using IC Markets, and I've used Hugo's Way, and I've used others, and they all say the same thing. We'll look at TradingView. TradingView, on some brokerage pairs, it says that the 2015 low is slightly lower. Some say that it's not. Okay, but we can kind of approximate it and say that we're either at a new all-time low or we're in the range of a new all-time low. So we're really at the extreme lows of where the lowest price points that CAD versus the Swiss franc has ever been since 1983, because that's where you can go back. On most brokerage pairs, you can only go back until 1983 with the CAD versus the Swiss franc. That's the price fees that I'm getting anyway. If you guys find more, that would be brilliant to look at. Okay. Now, the reason why we do we will do anything like this in terms of analysis is when the price makes, new all-time lows or very close to. And that's when we'll have to zoom out a little bit more. But anyway, since the price is taking an all-time low, logically speaking, the Canadian dollar would want to be encouraged to somehow kind of prop the price back up and at least keep the price from falling any further, because for the Canadian dollar, this isn't good. Now, the Canadian dollar in 1983 was 2.1, which means 1 Canadian dollar was equal to 2.1 Swiss francs. I did it with my academy students this morning. Okay, so it has lost a lot of strength over the years as Switzerland has risen as an economy anyway. But just looking at the price action from the weekly, since the price has taken this low, it's taken the low by about 8 pips. On average, the low here is about 0.65950. And the low here is about 0.66036. So about 8 pips apart, 8.6 something along those lines. On the weekly time frame, the body of the candle has closed beneath the previous year, and you can see that the price is actually using this area as an algorithmic price point, as a checkpoint for possibly a continuation to go short. If I drag this to the left over here on the weekly time frame, the price has broken beneath the last known weekly demand zone, which came in in 2020. And now that we have this kind of break and flip structure, this area of demand, so if I was to write this out quickly, this is a weekly demand flip zone. Since the price has flipped this zone the way it has, supply has become demand and demand has become supply. So in this case, this demand zone is a supply zone and is actually providing short liquidity. However, there is an opportunity for the market to potentially push back up and close above here. If it does, that will be brilliant to do. Now, on the D1 and H4 timeframes, let's put this here. Still using the same area here. The price action has been a bit weak recently. Last week, there was really, again, another one of the now it's a tongue twister. Another one of the aggregates that we've had, but this is a sell order aggregate that the price is working with at the moment. Now, I want to see how the price is going to react. And there is a way, because we're in a range right now, there is other ways for us to do some analysis to be able to find out what's going on. So I am going to go through some other forms of ways to analyze so that we can have a clearer picture on the price action. But from what we see here, okay, the price is really balancing on the H4 inside of this supply zone here. Well, it was anyway over here until the price broke above it. And now it's pushed, but it still managed to push down for a short. So we have a strange range going on, if you want to call it that. That's why I usually call them strange ranges. We have another supply zone area over here. And then we have demand liquidity near the bottom over here. So we're in this kind of range of supply and demand at the moment. And looking at this from the H4, even though you're probably wondering that if it's in a range, why would you trade it? I still believe that CAD CHF has some great potential for a long. Even though with the news, the price may push short if USD CAD goes long based on the Canadian dollar weakness. But nonetheless, I do think the Canadian dollar does have some stuff up its sleeve. Now, another thing to note as well before I move on is that because of Canada's relationship with oil, because it's one of the major exports, looking at the oil price, like spot oil, the WTI, XTI, will also help. If the Canadian dollar strength needs to go long or short, you'll see that there are correlations with gold, especially USD CAD and oil, excuse me, not gold. So for this second pair CAD CHF, what we'll be looking for? Well, the price is in a range of accumulation at the moment. And when the price does something like this, it's always good to add in other forms of analysis. So what I'm going to do, I'm going to add in another form of analysis that I don't think I've done with you guys before, but I believe is very necessary to do. Okay, and it's pair strength correlation analysis. So let me quickly switch over now. I'm done this analysis earlier on. And to do this analysis, you do need TradingView. Okay, so switching over to the screen, I'm going to explain it quickly. So what we want to look at here, whenever we have two currencies now, with gold being a benchmark that we can use as I would say like a reference point. That's the best way to put it. We can compare the strength change of two Forex pairs. So for example, in this case, the Canadian dollar versus the Swiss franc using gold. So you can plot both charts. TradingView is absolutely fantastic and it's free. So you can plot two charts against each other and compare strengths to be able to analyze what's going on. Because even if the price is in a range of accumulation, you still be able to tell the actual strength direction using gold, okay, or silver. In this case, I've got silver open, but you can use gold as well. All right, so I'll use silver here and I'll go for gold first and I'll show you with gold. So if I go for gold versus the Swiss franc, okay, and then I'm going to go for gold versus the Canadian dollar here. You just change this out. So if I go for gold versus the Canadian dollar and gold versus the Swiss franc. So here we go. So the blue line here, just to help you understand what's going on, is gold versus the Swiss franc. And then this line here, which is gold versus the Canadian dollar. And here you'll be able to tell the strength change. Now, the more positive the change is, now a positive change, just to help you understand what's going on here, whenever there's a positive change against gold, it means that the currency pair has gained strength against gold. And when it's negative, it means that they've lost, or the currency in question has lost strength against gold. Okay. So when we compare two of these together, we use gold as a benchmark as a reference point. We can start from the daily. So on the D1, which is the usual starting point that I go for anyway, if we look at what we have here, we have a positive strength change on gold at 20.64%, compared to the Canadian dollar, which is also positive, but at 10.72%. We have a large gap in strength of almost double in terms of the strength between these two. But the Canadian dollar here, which is what I'm highlighting just to make sure that you're with me. The Canadian dollar here, if you want to change the color for you to just show you that this is the same thing, you can change the color over here in the settings. You can change the style. You can make it a dotted line if you want to. If you go over here, you can change the thickness. So if you see, if I change the thickness here, maybe it can help you to differentiate between the two. So this thicker line here is the Canadian dollar. And you can see that intraday, now because we're on the D1 time frame up here, it means that intraday to intra-month, the Canadian dollar is a lot stronger than the Swiss franc, which means that CAD CHF should be along. So even though the price is in a range from the level 1 data, it doesn't mean that there isn't Canadian dollar strength, which doesn't surprise me because, again, I do expect, at lows at this point, I'm sure the Canadian dollar and the Canadian central bank will work out ways to try to keep their currency afloat, which will mean possibly bringing in some artificial bullish pressure. And whenever there's a range of accumulation, it's always the beginning of the birthing of new order blocks. Okay. Now, of course, there's not enough time to go through the whole infrastructure of how that works, but it puts me into a position where I think that we could possibly have a long. Now, it doesn't mean that will happen now. We may have a short first and then a long, but this is just for us to have a back end look, if you want to put it that way, on the Canadian dollar versus the Swiss franc. Now, the next time frame I usually look at would be the H1. Now, if we go for a H1 analysis here, again, looking at our thick line, the Canadian dollar on the H1, which we're looking at basically intraday in terms of like between Monday to Friday in a trading week, we have a 1.63% change positive against gold. So that means Canadian dollars gain strength against gold by 1.63%. And then on the other hand, we have the Canadian dollar, which has a 0.15%. So again, almost way more than 10 times, I guess, right now. About 10 times more, 11 times more in terms of strength between the two, which means on the H1 time frame, the Canadian dollar is also a lot stronger than the Swiss franc. So intraday, we should be looking for a long. This is what, according to the strength correlation analysis, this is what we should be doing. Now, if we go back to the charts here, the price is actually going short right now. So, when you do this correlation analysis, you do have to mix it with technicals, because if you said, okay, I'm going to just place a buy right now, you could set yourself up for a very bad day. Okay. But this helps us to facilitate, I would say facilitates our analysis as the second part, but the main thing, of course, is always going to be technicals. But this is a very strong piece of information that you can add to your analysis to help you understand, intraday, intra-month views, and help you to make sense of ranges. Now, we know what ranges do. I hope you do know what ranges do from what I've told you, but nonetheless, you want to make sure that you're always prepared for your analysis, in that regard. So these two pairs, USD CAD and USD CHF, are my main two. Okay. These are the main two that I'm looking at. Everything else, to be fair, either has gone already, like Euro CAD and Pound CAD, which I wanted to get into. But these two, I would say, are my top two. So I'm leaving you with this analysis, and we're going to look at the news very quickly before we head out. I'm just going to open up FX Street here on the next tab. And let's just take a quick look at the news right here. So at 3 o'clock, here's the news. It's expected to stay at 4.5%. We're also going to have the rate statement as well. I would say that, guys, don't try to trade at 3 o'clock on the dot and try to scalp the market, because Euro news and Canadian dollar news are some of the most lethal pieces of news in terms of spikes. Even though, of course, US dollar news is by far the largest in volatility. But in terms of spiking, the Canadian dollar is very well known for doing something like that. So I would say at 3 o'clock, this is just the preparation I would say that you can use to be able to guide yourself as to what to do. If you are in positions already or you want to get into, you have something as a benchmark to go by. Now, I wanted to keep this video short and sweet. So I would say mull over this, make sure that you have a great idea of what we can, I'll be trading as well. So I'm saying we, so what we can do. If you're in our Discord group, all right, I'll be posting more analysis and I'll share my markings here so that you can have them set up for you. But nonetheless, in this short video, I just wanted to equip you with all of the information you need to be prepared this afternoon. So recapping just really quickly here. So with USD CAD, what am I looking for? We have a break of market structure. The body of the candles closed above the previous week into supply. I want to see how the price interacts with this low right here, which is within weekly demand. So right over here, if I just write this out for you, it might help. So if I'm going to do it like this, weekly demand zone here. So the price taking the low and then giving us a long, if the CPI news gives us that spike, then the Canadian dollar news pushes the price the other way. That would be absolutely perfect. All right. The next one that we have is our CAD CHF over here. So CAD CHF, of course, right now is within a range, but according to the pair correlation strength analysis that I've just given out, on the D1, so intra-month, and on the H1 intraday, we are supposed to be pushing long. Now, we are in demand, and, one of the things we may actually do, or I may actually do myself, is simply just wait. For example, if I go over here, it's simply just to wait for the price to break above this area here like this. And then after breaking above this area, we can wait for the price to return, and then we can continue when the price breaks outside of this range. So, I mean, this is not the tightest of the ranges. There's tighter ranges within this area, but this is a supply zone anyway. If price breaks above here, we could get a pretty good entry stop loss of about 8 pips and ride the wave all the way up. We may miss out on the first 100 pips, but it may help just for you to be prepared that way. If there's a really good induction of lows or something like that down here, then we can get a better entry down here and just ride the wave back up. Okay. Now, in terms of news, in terms of my personal thoughts on the direction, if the Canadian dollar interest rate news stays the same, I mean, from a fundamental side, interest rates not being hiked for the sake of the fact that the interest rates have been working in the economy, which is what the government and I guess Governor Tiff and his colleagues have been saying, and have come to the decision of, if the Canadian dollar news comes out to be the same interest rates, then I would think the Canadian dollar would, I would say, lose strength. Okay, even though I know that it's positive for the economy, but I guess for investors, they might have fears that they're not taking care of the risks of increasing inflation around the world and etc. And that might produce a bearish result for the Canadian dollar. That's what my thoughts are. However, there could be kind of like a split situation where we have a Canadian dollar that becomes bullish because they're curbing inflation and they're fighting inflation, and they've seen that inflation is starting to reverse, because for those of you who follow our fundamentals again, the CPI news is showing that the CPI is actually going down. I think it's gone down from 5.8 to 5.6 and then 5.6 to 5.4, but I know it's down or has reduced by about 0.2%, which means why the inflation hikes were even started in the first place is working, which might be positive for investors. You got to think about it. Foreign direct investment, if they see that the economy is starting to ease up and there's more money in circulation nominally, well, then more investors can flock in and start to do business, which can cause the economy to grow and the GDP to become higher, which is also positive. Okay, so it's going to really be a tough and a tight one. From the technicals, it seems as though the Canadian dollar will be bearish, but from the fundamental side, the market could actually take the bullish position and the Canadian dollar can actually gain strength. So we'll have to wait and see until the news comes out. But that's my thoughts about it, guys. Now, I hope you enjoyed this video. Make sure you like, subscribe, share with your friends, and let everybody know. All right. And if you have any questions, jump onto the Discord group and share your analysis, your charts, and just share your thoughts. All right. Until again, now, guys, I'll be definitely doing more videos. I'll catch you guys later on. Everybody take care. Have a good day.